Rising recession fears pushed U.S. stocks briefly into a bear market on Friday, with the SVEP 500's decline from its all-time high in January reaching 20 USD 1 point. At the day's lows, the SVEP 500 was 20. Low its intraday high in January. There's no official bear market designation on Wall Street. Some will count Friday's decline at the intraday lows as confirmation of a bear market, whereas some strategists may say it's not official until it closes 20 USD off its high. Regardless, it's the biggest downturn of this magnitude since the rapid bear market in March 2020 at the onset of the pandemic. The average bear market lasts a year, 338 days, more precisely. The Nasdaq Composite fell 0.3 USD and is already deep in bear market territory, 30 USD off its highs. This week's decline felt as if the market was starting to recognize that earnings growth and SVEP 500 profitability may be in jeopardy as inflation will continue to be higher throughout the year, wrote David Wagner, portfolio manager at Aptus Capital Advisors. The SVEP 500's brief dip into bear market territory comes as the U.S. has been dealing with inflationary pressures not seen in decades. The jump in inflation then led the Federal Reserve to hike rates in March for the first time in more than 3 years. Through Friday close, energy was the only positive SVEP 500 sector year to date. Then this week, poor quarterly reports and outlooks from Walmart and Target raised concern over companies' abilities to deal with inflation and consumers' willingness to pay higher prices, putting even more pressure on the SVEP 500. At some point the market will turn, but it won't be until these winds are shifting. Inflation is coming down and consumers are feeling good about spending money again like they want to and are used to. The March 2020 bear market lasted just 33 days before the SVEP 500 ended up rebounding to record highs again as investors bet on internet companies which thrived during the pandemic. Wall Street continued dumping shares of semiconductor stocks Friday on recession fears, and as Applied Materials lowered its guidance. Shares of Caterpillar declined more than 4%.